Hey, Arthur Hill here with TrendInvestorPro.com. I'd like to welcome you to Next Level Charting. Remember, you can watch Next Level Charting every Thursday at noon Eastern Time, and you can also watch it on our YouTube channel. And if you like this video, please give us a thumbs up. So today we're going to look at bear market bounces. What led to this bounce other than the stimulus package? Signs of less selling pressure were evident. Look at the 10 biggest gains in the S&P 500 since 1950 and the aftermath of the 2008 crash. And finally, RSI ranges in downtrends. So I'm going to start off with some breadth indicators because these indicators were showing us that selling pressure was diminishing over the past week or so before we got this big bounce yesterday. And I'm not saying this is something you can use to time such a bounce because we were in a strong downtrend. And if you also notice, if you look at the S&P 500 here, this is the third big bounce in the last 3 weeks, and the previous two didn't amount to anything. So if we look at the breadth indicators here, 80%, we can see it was below that minus 80% level, strong selling pressure a week ago, 10 days ago. And then you can see as the time progressed, as the market went down here over the past week, that 80% indicator didn't dip below minus 80%. So selling pressure was less. And if you look with mid caps, the same thing. Selling pressure was less. And it was even more pronounced maybe in small caps, less selling pressure. I don't think you can use this to time a bounce, but it was just one of the technical indicators that showed us that there was less participation on the downside to give way to an oversold bounce. Now, we also have a couple more indicators that we're showing this. This is AD volume percent. It's advancing volume minus declining volume divided by total volume. And there you can see less selling pressure leading up to the bounce. But again, it was only 2 days here for small caps and mid caps and a little better for large caps. And then I'm going to click on this chart because this is on the essential breadth indicators chart list. And I have to move that over now to show you. I'm going to look at the bullish percent indexes because they were also showing some improvement if I can find them. There's the bullish percent indexes. I've got over 100 breadth indicator charts on this chart list here. I'll tell you more about it in a second. But there you can see this is the number of P&F buy signals. And this is the S&P 500. So you can see it hit a low. There are almost zero P&F buy signals in mid-March and held around the 10% level. And then there's the bounce that we got. And you can do the same thing with the S&P 100 and the NASDAQ 100. So we had some less selling pressure over the week to 10-day period leading up to yesterday's bounce. So if you're into breadth indicators and breadth charts, I would point you to the essential breadth indicator chart list that is from TrendInvestorPro.com. And it is available to subscribers of TrendInvestorPro.com who also have a membership to StockCharts. And this is over 100 charts. And it goes from the indexes, the major indexes, NASDAQ 100, S&P Mid Cap 400, S&P Small Cap 600, and S&P 500, of course. And then I've also got breadth indicators for the 11 sectors. And these are grouped in a logical format. I've gone through and I've basically created these breadth charts so you can use them and see how they look. Basically, I've done all the hard work by making these breadth charts, customizing them to how I think is best to use them. Now, there's also a video when you're a subscriber to Trend Investor Pro, and it describes these indicators and how I use them. There you can see it's 43 minutes and 46 seconds. And there's also a written commentary discussing these indicators. So it's only $29 a month. You can subscribe, get the list, read the article, and get the video, and cancel if you like. But I think it's worth it just for that. So I looked at the one-day rate of change for the S&P 500 since 1950, and I put it in a spreadsheet, and then I sorted to see the biggest rates of change since 1950. And basically, you can see there have been 11 days, 11 times, when the rate of change was 6% or greater here. And what's interesting is you can see 3 of those occurred in March 2020. On March 17th, we're up 6%. On March 13th, we're up 9.29%. And of course, we fell after those bounces. And then, of course, we have the gain on March 24th, up 9.38%. That was the third biggest gain ever in the S&P 500. Now, what I'm interested in is what are the other times that the S&P 500 has made these big gains? Well, October 2008 jumps out. 2 big double-digit gains in October 2008. We're going to look at that chart. October 1987. We're going to look at that chart as well. March 2009. Now, this one did mark the bottom. But then we get back to 2008, November 2008, and then March 2009. So we had 2 big ones in March 2009. But look at how many happened in 2008. That was a crazy period. 1, 2, 3, 4, 5. 5 of the 11 biggest gains in the S&P 500 occurred during 2008, and 3 in March 2020 here. So clearly we're making some history. And let's see how these charts look. All right, I'm moving over to a different charting platform now. And what I've got here is the red bars show when the S&P 500 is down more than 7%. And there you can see 3 times here in March. And the green bars show when the S&P 500 was up more than 7%. And that one is there. And that would be another one yesterday, of course. And in between, we have another 6% gain there. So you can see that volatility is clearly picking up. I got what I call the volatility megaphone. There you can see the rate of change is just increasing here since late February. And that's why volatility and risk are above average. Now I'm going to go back to that 1987 and that 2008 period so we can see what price action looked like then. I'm going to drag that over. So here we are in 2008, and there is October 2008, and there we can see the biggest moves. There's a decline more than 7%, and then there's an advance more than 7%. So we had 2 big 7% advances, more than 7%, and then 1, 2, 3, 4 declines that were greater than 7%. So October 2008 was not a fun period to be in the market. And we're going to look at that volatility in a little more detail in just a second here. And then let's look at 1987. That was, of course, the crash. And so you had the crash here. There's the crash day when we were down over 20% in one day. And then 2 days later, we had a huge gain. And there's that green bar. But look what happened after the huge gain. We had another huge loss, and we had a test of the lows over a month later. And I think that's an important concept to bring across is you didn't bottom. Okay, sure, the exact low was the day after the crash, but you tested that low. So you had a second chance. You didn't have to catch the first bounce. And you got this second chance, and then the market worked its way higher. But if you look at 87, it wasn't a steady, well, it wasn't a big advance. It wasn't like a V-shaped recovery. If we look at this here, you can see this was like a slow, long, drawn out advance. All right, sure is a big advance from 230 to 300, but it took place over a year. So there's November to November, there's 1 year. And it was steadily marching higher, but it wasn't this V-shaped recovery where you go down and then you come right back up. So here's a little more detail on what happened in 2008. We had a number of big up days and a number of big down days. And you can see here, I've got the zigzag 10% indicator on there. That is the pink line. And look at this. We hit a low in September and had a 10% surge from low to high. And then there is the crash that happened basically in October 2008. And then we had a 10+% surge and a 10+% decline, and then another 10+% surge. So we're up, down, up, down, up, down, up, down. I lost count already, but that's basically 1, 2, 3, 4, 5, 6, 7, 8, 10% moves after the October crash. And so today we've had one 10% counter trend move. I don't know how many we're going to get. I do know, though, or I do think that we are in a bear market. We have broken down. There's been some serious technical damage. We're below the 200-day moving average right now. The 200-day moving average is turned down, and volatility is extremely high. And so if you look at what happened in October, this advance that we're seeing right now of 10% is not abnormal. And big advances, more often than not, happen in bear markets because bear market rallies are famous for being very sharp and sudden. So I would think that this is a bear market bounce at best, and volatility is the name of the game right now, as is the current bear market environment. The indicator window shows 14-day RSI, and you can see here that it did not get above 60. There's that 50 to 60 zone for RSI. And even during the big October swings, it just barely got above 50 in early November and then came down. So this is kind of like the bear range for RSI, this 20 to 60 zone. And if you can get above 60, okay, then maybe you're making some headway. But to tell you the truth, RSI needs to get above 70 to become overbought to show strong upside momentum. Because typically, when RSI becomes oversold, that's a sign of strong downside momentum. And keep in mind, I'm talking about 14-day RSI there. So we've become oversold in March, and now we're getting a bounce. And if RSI gets above 50, I would think that's more of a warning that we might be ready to turn back down. I already think the warning is here now that we've had a 10% advance that the market could turn back down. So StockCharts is running a special program called Navigating the Bear Market. It was broadcast on Wednesday, March 25th at 12:30 Eastern, but it is up on the YouTube channel and it will be appearing on StockCharts TV. So I'd recommend you catch that and look at it for some ideas. So that concludes this edition of Next Level Charting. Again, I'm Arthur Hill with TrendInvestorPro.com. If you're watching this on YouTube and you like this video, please give us a thumbs up. Thanks very much for tuning in and have a great day.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.